Welcome to Nerd Stock Talk. We do this every Sunday.
Every single one.
Every single Sunday at 7 p.m. And so with us is our co-host, JP Wildman of jpwildman.com. How you doing?
jpwildman.com. I don't. That's not a website.
I know we could have checked that out. If not, then we're gonna have to make sure. And if it is, we're gonna make sure it's a safe website to go to. All right, so we're here. So we got a jam-packed episode here. We're going to be talking about infrastructure plan stocks. It's not the Green New Deal. We're kind of calling
this is really invigorating stuff.
This is invigorating stuff. So we always say stick to what you know. Like literally look at what look at the stocks that you know about. Look at what are you passionate about and go on that. So, but here we know that there's going to be some pretty significant movement in infrastructure stuff, where manufacturing, high-speed broadband, water, all these things that we're looking at.
A lot of tax dollars spent on those things.
Exactly. So when you see those RFPs, those requests for proposals that are going out, and people that are going to be building a lot of stuff, it's going to help businesses. It's going to help workers. So, and in that case, if these are some stocks that you're going to be looking at, we'll show you a Google Doc, and we'll probably link it in our show notes for anybody who wants to check it out. But before we do that, let's jump into our last week picks. All right, last week picks. I think so. Let's first look at we look at our 3 months. So Canoo down 40% in the past 3 months. Your Lithium America's down 2%. But to be fair to you, JP, the Canoo was down 48% last week from the past 3 months. So it's creeping back up.
It's coming back. Back. What was it 3 months ago?
What was it 3 months ago?
Yeah.
Well, let's check. So obviously, whatever it is now, but that
must have been the top of the bubble. Bubble.
Right, and I think we're going to be seeing that where it was at the bubble. So 3 months ago, it's down $6 from 3 months ago. It's at $9 now. So
it wasn't too bad. Yeah.
No, it was around. It was like $15 or so.
Without the heavy shorting going on, 15 is what Canoo would be at right now.
Right. Yeah.
Canoo is one of the heaviest shorted stocks in the market right now.
Right. So if you had extra, you would buy more stock in Canoo then.
Yeah. I like the stock.
Yeah. All right, and then also this is the one that you're really looking at this last week was Lithium Americas. So is this going to turn into more of a long-term look for you, or this is just kind of like a flash?
Lithium Americas is kind of a long-term stock for me. I've held it for quite a long time. I'm feeling like it's been undervalued for quite a long time, and that it's due for a jump. I think fair value on Lithium Americas is probably the $19 to $20 range. Really? I think it's maybe like 14 to 15 right now.
Okay.
And I think with this infrastructure plan, if we really start adopting electric car batteries, Lithium Americas has some of the only lithium mining rights in North and South America. So
right.
They're really well positioned to fly.
And what would you say? What are you looking at when it comes to the? Never mind. So we'll talk about that when we do our main topic. So I was going to ask you more about that.
We'll save that for later.
Yeah, we'll save that for the next few minutes. So
we want to run out of things to talk about.
Right. Well, exactly. Yeah. Exactly. So what I got here, Tencent, it's still down 13% in the last night. This is still I'm looking at Viacom. I think it's still hovering around $41 or so. As we say, the high was almost 100 last month. So it's going to come back up. As I say, I think especially I think it's still going to come back up. I'm not going to be watching it next week. I think it's going to be a slow climb back up to where it should be, but and we'll talk about what I'm going to be looking at for next week anyway. So, but other than that, I want us to jump right into our main topic because we have a lot of fun stuff to talk about in our main topic. So we're gonna
cannonball. Here we go.
We're gonna cannonball right into this. So tonight's topic, I'm going to pull it up. Tonight's topic is we had it written down as like new stocks to look at for the Green New Deal. Technically, it's called the infrastructure plan or something along those lines, right?
Right.
So what we have here is a Google Doc. So you shared this with us first, Mike. Do you want to kind of JP? Do you want to tell us a little bit about what this is?
Yeah, so this is a Google Doc with the different sectors that are going to benefit from the new infrastructure bill and the largest market cap companies within those sectors. So this pulls real-time data right from the market. I believe it comes from TradingView is where Google gets their information from. Mm-hmm. So all of this information should be fairly up to date as long as the document has been updated. Mm-hmm. And you can scroll over, get all sorts of information about the different companies. If you go all the way over to like the X, Y, and Z columns on one of those sections, Barney, you'll see.
Oh, wow.
Yeah, and even as all the way into the granularness of the analyst ratings on whether or not to buy it or hold it or where it's headed and what the price targets are. So this is really neat, and you could also, if you wanted to just use this for your own reference, plug your own ticker symbol into the ticker row and. You might have to save it on your own computer to get that done, but you can swap any of those tickers out and get the same information for any stock.
So let's talk about what this has here is it has 1, 2, 3, 4, 5, 6, 7, 8 tabs. It's got 8 tabs on here, and the first one is infrastructure. Basically, what's it here? Like construction, roads. I see John Deere is on here.
Construction equipment, materials, energy, oil and gas,
right.
Construction.
And then you have here senior living stocks on this. And then you have housing, so companies that work in housing, manufacturing, high-speed internet, broadband, water, clean energy, and some semiconductor stats. So JP, looking at this, we look at stock price on here, they range. There's a whole range on here. So for instance, under here, Energy Fuels, $5.51 a share. It looks like it is considered a hold or to a buy right now. And compare that to say some of the higher ones. You got Martin Marietta Materials Incorporated, $353 per share. So it ranges. So
all over the place. All over the place. Some of these companies are going to do better than others. I don't know. I don't believe the bill has been finalized yet. So we'll see how that shakes out. One of the interesting things in terms of clean energy is the prospect of standardizing vehicle charging ports. That's something I think that's going to be key to electrifying America's transportation. So if anyone gets to the forefront of that, we're going to see some huge gains there. Some of the charging network companies.
And so talk to us a bit about the difference. You have electric vehicles on here specific. So let's step back a bit. Out of these 8 categories, which one do you feel, and this is kind of a politics question, I guess, too, which one do you think before this infrastructure bill gets passed, which one do you think will not get cut? Basically, will keep it
not get cut. It's going to be infrastructure and it's going to be clean energy.
Okay, these two will
will not get
your biggest bet is that these are
semiconductor is probably going to be in there as well.
okay.
And really, if you're really looking for some savvy investments, you might start at the top. All of these other sectors are completely reliant and dependent upon semiconductors.
Really?
So there's a semiconductor shortage going on. There's a massive raw material shortage going on. The pandemic has just pent up demand, and of course production was shut down and or is going on in limited capacity. So semiconductors are in short supply, and of course everything in the world needs a semiconductor of some sort, from your watch to your car to your excavator that's digging holes for houses,
Right.
all the way, anything you can think of. If it's electronic, it needs some sort of a semiconductor to operate. So these companies are, I'm not sure why they're down, because they should be up. They're making money hand over fist right now.
But it would also too, like you say, this is a category. This is a category of that. But within that category, you have these different businesses, and each business, some of them say underperforming, some say like your rating is a buy, some of them is buy.
Yeah.
So and some of these, so if I'm looking at this list and I'm like, if this is all the same stuff, then why are some of these companies saying it's rating as a buy and some of them are not? What would be an answer to that?
That's more dependent upon the company itself and its
Right.
and its own financial performance, its management, its position in the market. I mean, there's so many. Nvidia may have a contract with IBM, which gives it a bigger market cap now than Qualcomm. It depends on what they're specializing in, what sectors they're in, and all sorts of things. Their supply chain deals they've been able to strike, their distribution and logistics deals that they've put together. I mean, all sorts of things play into how much money a company makes.
Right. And the good news is like, and here, this is the other good point. We talked a few weeks back about socially conscious investing. So, and this is a good point too, where like, if you're not sure where to start, but you really believe in clean energy, pull this up, and then you can then go on to, you can look at the the socially responsible investing and look at which one of these have that higher socially responsible investing rating on.
And you could take it a step further, and we talked about ETFs at one point. Let's say you had $100 that you wanted to invest,
right?
With Robinhood and most online brokerages now, you can buy fractional shares, so you can figure out if there's 10 stocks in this list, buy $10 of each of those companies, and you've made yourself your own ETF, which is sort of minimizes your risk and spreads your investments out over a few different companies. So
right.
The gains aren't typically as good as that penny stock home run that you get sometimes, but you will still do well.
Right. And so what would, you're always going to be, so what would be, I'm looking at this. So you would say, through this, what would you think would be the one that might get gutted the most? Senior living, housing, maybe? I'm not sure.
Senior living and housing. I can see that not going too far. Not to say that these stocks aren't going to go up. If they get cut, they probably won't see a bump from the infrastructure bill like these other stocks will. Yeah. And I'm not predicting any long-term effects. I just think that some of these stocks are going to get a major hit in the market for a week or so, probably. A small little bubble to play. Long-term, I'm sure they'll do fine. But right off the bat, if you're looking for a quick way to make money and the infrastructure bill passes, some of these stocks are going to probably see a price rise that's more than what they warrant.
Yeah. And do you see, So Daily Dan blog just mentioned. He said, "Hey, thanks for watching, Dan. Very interesting. Thank you." And yeah, check out Daily Dan's. Check out his stuff. He's got some stuff on his YouTube. Yeah. But like, yeah, so this is a good thing. Like you're looking at some of these, each one of these, and as I say, we'll link this Google Doc in the show notes. So when you see this on YouTube, we'll have this here. You can click and check it at your leisure. And another thing, talk to your neighborhood friendly financial advisor,
which is not us.
Which is not us. Yes, we'll be very clear on that. So which one of these would you? Because when you shared this, when you initially shared this with us about a month or so ago, was there anything on here that you were surprised not to see on the list or surprised to see on the list?
No, not really. I mean, all of it makes sense. That some of the manufacturing stocks, I guess, I was kind of surprised about, but it makes sense when you look at it. The robotics and artificial intelligence stock in particular is one of the ones that jumps out at me that seemed a little funny to have in there. I'm not sure what's in the bill though. So I guess we'll find out.
Yeah. And that's what I like about, like, this is something that I'll probably look around at, because some of these lower stocks, I'm curious to see if it looks like they're a good thing, like here with the manufacturing CPS Technologies Corporation, which $7.50 a share, and
yeah, and that's actually one I've been watching for quite some time. That's a hyper growth potential stock.
Okay. Yeah, it looks like it was at 30, a 52-week high was at $30, and then it was $1. The lowest went down to $1. So it seems as though it might be a little.
It's an interesting stock. There's a big backstory there.
So what would you be, not the advice on specific stocks, but what would be your recommendation for people watching this to say, what can somebody do with this information?
This is great material to build a diversified portfolio that has it's not guaranteed to grow, but these companies are going to benefit from climate change over the next 10 years, 15 years. Right. Regardless of what politics and the media are saying, I mean, it's clear that we are going to be pivoting towards a carbonless society, and things are going to need to be adjusted. Things are going to need to change. You're going to start seeing, coastlines, people moving away from coastlines that are, sea level rise and that sort of thing. There's going to be a boom in construction, just because of that,
right? Which
is unfortunate, because I don't think that has a positive effect on the climate problem, but that's just the reality of what's going to happen. So for me, I am heavily invested in clean energy, because economic growth cannot happen without energy. Mm-hmm. And it's clear that we can't continue with fossil fuels. And as I've said before, the market cap that is oil right now is going to be flooding into clean energy stocks, whether it's wind power or solar power or lithium. Spread oil out over those three sectors, and you can get a sense of what those sectors are going to be worth, and possibly more as economic growth occurs. You can't have economic growth without growth in energy. The two are intertwined.
Right. What's interesting is some of these stocks that we've been talking about over the last several months are on this list.
I know.
It's almost like it's almost like we know what we're talking about.
So it's almost, yeah. There's a few over here that I've missed. I've kind of done some research on some of these, and I was really disappointed that I overlooked them. But I can only invest I can only invest for you guys so much of my money.
No, but this is, as I say, there's so much to look at here. I didn't realize how many company. I guess I should have known that, how many companies are actually working in clean water, that are working with the water aspects of things.
Yeah.
And these, as I say, looking at some of these tickers, looking at some of these companies, these are fairly, I would say, low enough where you can, a person could play with some of these stocks and then and see what you can do with it. So each one of these.
CPSH is that is a stock that's if you're into adrenaline rushes and absolute depression and everything in between in your weekly trading adventures, CPSH is a good one to play.
$30 at a
wild ride.
Yeah, that's amazing. And then the housing stock, like I said, some of these are real. Wow, look at this. Envy, look at that, is a big share price right there.
That's a very big share price. And that's what happened when stocks don't split.
Right.
You take Berkshire Hathaway, I think they're $300,000 a share, the share price has less to do with what the company's worth and how much money the company makes as it does how many shares there are of the company.
Right. Wow. Yeah, that's because that was a point that you brought up with me about my Disney stock, because it's been split few, but I don't think Netflix has been split. So
yeah.
Good stuff. Yeah, this is look at some of these stocks here. This is good. This is a great place. As I say, we'll share this in the show notes for people to check out. Interesting things. So good.
And this is a great screener tool as well. As I said, you can use this spreadsheet, plug your own ticker in for any stock you want to do some research on, and the same information will pop up for that stock.
Yeah. So this, as we say, the stock market is always forward facing. It's always looking to the future. So it's not reactive, it's proactive. So we are going to see, especially if this infrastructure bill passes.
I don't know if I think I disagree with you on that. I think a bull market is proactive. I think a bear market is reactive.
Right. Yeah. But it's reactive to what's going to be happening and what they predict is going to happen in the future.
Yeah.
So it's it's, as I say, it's like the bear market is, they react to the sense where they know that something is going to happen, that they need to kind of hunker down a bit. So
sure.
Yeah. So let's jump right into our final segment of the night. Here we go. All right.
Final segment already.
See, this goes quick. I mean, we're already got 5 minutes.
Flies right by.
Yeah, see, time flies, man. Here we go. So we are, all right. So I'm watching Plug. I have Plug. I already had that stock. It was pretty volatile now, but it seems like it's kind of going back up a bit. So it went down, I think, because of news that it was going through. I can't remember exactly what the deal was, but
every green energy stock has really tumbled in the last 3 months, though.
There were meme stocks, weren't they? Was that basically?
I think it was just. I think they were getting pumped. It was a bit of a bubble going on.
Right.
Because every green energy stock fell at the same rate, and I think it had something to do with the margin calls the hedge funds were getting against stocks like AMC and GameStop.
Right.
So they were pulling out of those funds to cover the margin calls, which was causing the prices to decline.
Yeah, because I would just show up to the screen there. But if you look at Plug Power, went down, it went up, and then it went back down, but now it seems to be.
It's back on its trend line.
It's back on its trend line. If you see that, its trend line is, so that was kind of a little hiccup it had there. So I believe it's going to be,
It's a good buy. It's a good buy at this price.
Yeah,
sure.
It'll go up. So yeah, I'm sure it'll go back up, towards maybe double its price probably in another, 18 months or so. So
yeah,
I mean, it's a good long term. I think it would be a good long term.
Oh, absolutely.
Yeah. And tell us about Swim, JP.
So Swim is Latham Group, which is the largest swimming pool manufacturer in the world. They manufacture fiberglass swimming pools, steel-walled swimming pools, swimming pool liners, swimming pool covers, all things swimming pool. And just IPO'd last month. It's a company I'm familiar with in my endeavors as a swimming pool builder. So I'm familiar with these guys. They do good work. They make a good product, and I happen to know that they are also short of materials and making money hand over fist because their prices have doubled in the last year on some of their stuff, and they cannot keep up with demand. There are 3% of new homeowners are looking for swimming pools, and there are only something like 60,000 swimming pools being made a year in this country. So
wow,
supply doesn't meet demand, and Latham is the biggest supplier. So I think it's gonna go up.
Okay, cool. All right.
As soon as there was any sign of any sort of banking or mortgage troubles or housing issues, any sign that bubble is about to break, I would dump Latham without even batting an eye. But
okay,
this is a great garnishment to any real estate investments or housing bubble gains you're making in the market right now.
True. And you know what? And that was something like early on about 6 months or so ago. I had C stocks. I was like, man, I just really, I got, they're going down or going. And somebody gave me some piece of advice, and they say, don't have loyalty on stocks because that company doesn't know you exist.
Exactly. Exactly.
Don't feel
trade by the numbers. Trade by the numbers.
Yeah.
Let the numbers make your decisions. Don't
Right.
Don't let brand loyalty make your decisions.
Yeah. So
that's probably one of the most important pieces of advice.
Yeah. Yeah. They don't know you. They don't know you exist. So don't feel as though that you need to keep the stocks. Have your target on it. Like we always talk about, if there's a thing that you're flipping, like, if there's a target, you want to get at least X amount money on it, then, and it starts to dip back down, whatever you want to do, but don't feel any sense of brand loyalty on any.
Absolutely. And I got another one I need to add to my next week's watch. And that's Dan's Barbershop in St. Johnsbury, Vermont.
There it is.
You can't get an appointment in that place because every appointment is taken. The man is cutting hair all day long. I can't get my hair cut. I don't know what's going on. He needs to raise his prices. I think Dan's Barbershop to the moon.
Dan's Barbershop, right to the moon and back. Okay, yeah. Is he a sponsor of the show? That'd be a good idea. Get him to be a sponsor.
Yeah, we could actually make an income.
Yeah, good. Yeah, good local shout out to Dan's Barbershop. There we go. Yeah, yeah. And then I have to. I get it. So if you're doing a local shout out, I got to do a local shout out. Local shout out to Deb's Place. It is the best breakfast place in Lamoille County you can go to. So check it out in Morrisville.
Deb's Place in Morrisville.
They have Donut Wednesday.
Really?
Fresh made donuts on Wednesdays.
Freshly made.
They make it right there.
Does Deb do the jelly donuts or just the regular old donuts?
Regular donut, but she has maple glaze. She has a maple frosted ones, some sugar donuts, and I think she does apple too. I think they have apple donuts on there. But yeah, check it out. So good. All right. We are at our 30-minute mark. So thank you very much, everybody. So tune in every Sunday at 7 p.m. Eastern Standard Time to see two guys talk about stocks.
It's invigorating.
There goes Greg. Thank you, Greg. All right.